Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be talking about 1099 loans. So we'll go over the live mortgage rates here today for some different programs, and then we'll do a deep dive into 1099 loans. Definitely something we're familiar with here at the Mortgage Calculator. We put up the chat on the screen there, so feel free to drop a comment as you tune in. We appreciate everybody tuning in nice and early. We'll get started here in just a moment. Hope everyone's having a great week so far. Great holiday season. Give us just a moment here to go live on all the different platforms, and then we will get started. Feel free to drop a comment there in the chat as you tune in. And all right. Okay, it looks like we're live on all the different platforms, so we'll go ahead and get it started. I see comments coming in. Keep dropping comments there as you tune in, and drop any questions you have in the chat as well, and we can go through those later. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator. This is our daily rates live show where we go through some live mortgage rates and then we do a deep dive into a different topic. Today's deep dive topic is 1099 loans. Now at the Mortgage Calculator, we are a correspondent lender that specializes in non-QM loans, and 1099 being one of those. So our sales manager, Jose, with 28 years of experience, is going to do a nice little breakdown of some 1099 loans and pull up some quotes for those. But before we do that, let's do what we do every morning, which is go over the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like this morning.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates for today, December 21st, just after 11 a.m. So all of the general rates are live. So we will compare across the different programs here with the tool. If you'd like a full loan estimate that breaks down all the itemized fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. So for the demos, we'll always set up a basic scenario to compare. So we'll always set the loan amount to $400,000. We'll set the LTV to 80% loan, 20% down payment. We're going to have the computer search for the lowest rates we can offer for conforming conventional. Then we'll compare FHA. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options with alternative income. We also offer VA and USDA. Remember, VA is only for eligible vets and active service members. If you are, just let us know. USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary home, single family, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use a credit score here of 760, and we use an estimated debt-to-income ratio here of 40%. So with these settings, as we do every morning, let's check out the rate options. All right, looks like a lot of options here, right about the same, but a little bit lower than yesterday, which is great. 6% rate, 2.375 discount points in cost, puts the final APR at 6.275. Now, these are great options, and we'd love to see the rates go down. But if for any reason our customer doesn't qualify for a conventional option, typically the next one we want to compare is an FHA program. So for the next demo, we'll set it up exactly the same, and this time we'll select FHA. FHA does allow more leniency on credit issues, as well as a much higher debt-to-income ratio, but we'll keep everything exactly the same so we can compare apples to apples here across the programs. Oh, today conventional is winning. Okay. So best FHA option this morning, 5.375 rate, 2.5 discount points in cost, final APR 6.311. Conventional is actually cheaper today, which FHA is typically a touch cheaper. Probably tomorrow, next show, we'll see this go down a little bit. But this is great. The APR does include the upfront and yearly mortgage insurance required for FHA. So our customers that qualify for both definitely don't overlook FHA. Some days it's a little bit cheaper. And our customers that must use it, it's definitely a good option. Now, where we love to specialize at the Mortgage Calculator is if our customer unfortunately doesn't qualify for either conventional or FHA. Many other banks or lenders will have to just deny that customer, but that's where we love to present our 5,000 additional options here under expanded guidelines, also known as non-QM. So we'll keep everything else the same. However, now we have a new option pop up where we can change the income. So full doc is what we use for FHA, and conventional, that's 2 years of tax returns, what most people are used to. So we'll typically choose a non-QM program to select an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll show those in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular. We'll also have RSU, stated income, VOE, 1099, which is Jose's topic for today. So he'll go through these two options. We have P&L, no income CDFI options, all kinds of different options here. The most popular is our 12-month bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have write-offs and may not quite get the income they really want to use, and therefore we will solve that problem. No tax returns at all, just 12 bank statements, and we'll determine a new debt-to-income ratio here of 40% in the example, using just the cash in the bank accounts, no tax returns at all. So many times our self-employed borrowers qualify for much more income and can therefore get that home they really want. So let's check out the non-QM options this morning. And again, not much movement in non-QM all week, pretty much the same. 7.375 rate, 2.125 discount points in cost. Final APR 7.767. So it's about 1.5 points higher, I believe, is where we're at today between conventional and non-QM, which is, again, the typical market. For a while there, non-QM was beating conventional. Now it's typical where to use bank statements, it does cost a little bit more for our borrowers. But for our borrowers that need it, trust me, these programs are amazing. Not only do we have these solutions here at some great rates, some of these at even higher rates and costs may allow things like bankruptcies, foreclosures, late payments on mortgages, other credit issues, and some may allow us to use different ways to calculate income. So hundreds of different options here as we scroll down, and some of these at higher rates and costs may allow those other issues to be solved. And before we pass it over to Jose to go into the 1099 examples, we always want to do live pricing for investment properties. So we love working with investors, first-time investors, seasoned investors. We have some great options here. So we'll set up the same scenario, 80% loan to value, 20% down payment, and we'll compare our investment property options, which are going to be our conforming conventional, and we'll compare that to our expanded guideline options, also known as non-QM. Government programs like FHA, VA, and USDA do not work for investments. So we'll start with conforming conventional here. Everything is going to be set up the same as the other demos. Besides, we've edited the occupancy to investment. So let's check the conventional rates here. All right, some downward movement there as well from earlier this week, 6.624 for 3.25 discount points in cost. Puts the final APR at 7.005. So almost under 7 on the APR. This was well over 8 for a while there, and our non-QM options were definitely beating it. But now that the markets have stabilized a little bit, these options are viable. Again, definitely recommend. All of our customers that were worried before, definitely check it out. But also compare a non-QM example. Those are great that we can now use those. But let's set up our final demo here to compare our non-QM expanded guideline options for investment properties. So the first thing we need to select is our income, the most popular income and our most popular loan by far, the DSCR loan, because it doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated appraisal rental value for our DSCR. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows monthly, that's a ratio of 1 or higher. We also have options under 1 where the property doesn't quite cash flow monthly. For the demo, we always use 1.5 as the highest value so we can see all the programs pop up. And finally, a prepayment penalty must be selected. This is standard for these programs, so we always select 3 years for the demo. There are options for no prepay that will limit what shows up and cost much more. And there are also options for 5 years, but not all programs allow it. But it does save our borrowers some money if they want to hold the property. 3 years is the most common, so we use that so we can see all the most common options show up here. So absolutely smoking. Again, DSCR rates are smoking right now. 7% rate, 3.5 discount points in cost, puts the final APR at 7.526. So we're still within half a point of conventional for a DSCR. I'd say 99% of investors would still take a DSCR loan at that close of a cost difference for the flexibility to do 1, 2, 5, 10 loans at a time. No income, no employment needed, and can refinance multiple properties to purchase multiple properties. So tons of flexibility here, but obviously let your customers compare. As we scroll down, some of these options at higher rates and costs may allow things like bankruptcies, foreclosures, late mortgage payments. Some of these may allow different ways to calculate income. The ever popular short-term rental income being used may be allowed at some of these other programs. There's hundreds of different versions. Please get with our team to find the best ones. And now let's get into Jose's deep dive to one of our favorite non-QM options, which is our 1099 programs. So we've done a few episodes on these as well, so this will be a replay of those. But these are a specific category. You see me do that every day on the live rates. There's the 1099 options. They are a little bit varied, and bank statements is more popular and more standard, so that's why we use that for the demo. Jose can now go into a deep dive of the 1099 programs to explain how they vary a little bit in there. So, Jose, if you're ready, let's go ahead and explain what 1099 is for, obviously, because it's obviously not the best non-QM option, but for certain borrowers it is. So let's define why we use it first, and then let's get into some examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here this morning. So 1099s is another of our alt doc income streams for for self-employed borrowers. For self-employed borrowers. 1099 borrowers typically are going to get, not all the time, but typically are going to get paychecks. Their paychecks do not have any deductions because the person who is contracting them to work is contracting them as an independent contractor, and the 1099 independent contractor, which is what they are, they're not really an employee, is responsible for their own payroll deductions and all that kind of stuff. So they are a self-employed borrower. 1099 borrower, typically you can find realtors is a good 1099 borrower option. For example, really good for our real estate agents. Now, 1099 is going to differ from bank statements in that you usually derive your income from one particular quote unquote employer, from one person who contracts the independent contractor, is usually the case. Also, the expense ratio on the 1099 loans is a lot lower, aka the profit margin or the percentage of the gross income that you are allowed to use. That is the biggest benefit right here. The default profit margin on bank statement loans is 50%. You can go higher than 50% if you get a letter from the tax preparer or CPA or accountant, whichever they use, of the borrower, stating the nature of their business, how they derive income, basically a business narrative letter. And at the end of that letter, after they have a detailed description of the borrower's business, will be the expense ratio that that business has. So if, for example, the business has a 30% expense ratio, we're going to be able to use 70% of the deposits. Whereas the 1099 defaults to 90%, and at that point, they will reduce that amount, the 90% profit margin, only if the business narrative provided by the self-employed borrower would show that their expenses would be higher, like if they have employees, if they have overhead, whatever it is that they have in their business narrative, high inventory that they have to carry, things that would normally trigger that you have higher overhead then only 10%. So again, be on the lookout for that. But 1099 is definitely the way to go if you're trying to maximize the income of the borrower, and obviously if they have a 1099. So if they do get 1099s, be aware that there are restrictions. Sometimes some of the options for 1099 do require the 1099 income to be sourced only from one employer, so to speak, the company, from one company that is contracting that independent contractor. In some cases, they do not want the independent contractor being contracted by multiple companies. So that is why, for example, we love realtors for this program, because a real estate agent can only have his license with one company at a time. Now, they may have been in different companies, maybe 2 or 3 companies in one given year they moved around. So they may have 1099s for different companies. That's an extenuating circumstance that would need to be explained, but very explainable. So let's go into the options that we have here. First option that we have is for our 1099 1 unit purchase, as is the case for all non-QM loans, and 1099 is a non-QM loan. 90% is the maximum LTV, and mortgage insurance is never applicable. So here we have 9.625, almost at par, and we can buy that rate all the way to 8.5% on our purchase. And like I like to state in our daily rate show, if the seller on this purchase is paying some or crediting, some money to the buyer closing costs, that money can be directly applied to the loan discount fee. That loan discount fee will then not be counted in any compliance tests. So you could definitely get a rate lower than 8.5% and be in compliance if you're getting seller paid credits. That was 90%. Now at an 80%, more the traditional loan to value for this product, now you see the rate drops precipitously. Now we're looking at 8%, costing 3/4 of a point, and you can buy that down to 7.375. And I did look at the rate sheet at what prints out as our non-compliant options. We did have options in the high sixes, costing a little bit more, but it would be possible if your seller was paying some of the borrower's closing costs. So now we have an investment 1099, and I put here closing in an LLC because we have an option closing in an LLC, and we have an option that only allows you to close in a personal name. The difference between the two is also going to be that the option that allows you to only close in a personal name will not allow a prepayment penalty on an investment property. This option that closes in an LLC, as most investors like to close on their investment properties, does allow a prepayment penalty. So on the LLC investment property option, 9.75 is our lowest cost option, and you can buy that down to 8.25%. And now closing in the personal name, you actually, with no prepayment penalty also, you know that the rate is actually a little lower, right? So 9.75 here is a 1/4 point cost, whereas 9.75 on the LLC option with a 3-year prepay is 0.875. So again, if you're closing in a personal name, that looks like a great option. And our 80% LTV, more traditional, quote unquote, if there's such a thing as a traditional 1099 loan, right? But 80% is more readily available option. 8.625 is almost par. So you see the rate drops by over 1% there. 8.625 is almost par. 7.25 is your lowest rate option. And my last couple options are going to be cash out. So here we have our primary cash out. 80% is the maximum LTV. In our bank statement option primary, we are able to go to 85%. LTV. Secondary does have a bigger appetite for bank statement loans. Hence, our 1099 max LTV primary and a cash out is 80, which is also our max LTV and a cash out primary on our profit and loss loan, which is another alt doc option that we have for self employed borrowers. But again, both of those, the bank statement does have more appeal to secondary. But still, on our 80% cash out option, we still have great rates. 9.375 is our lowest cost option, 8.25 lowest rate option. And last but not least is our investment. In this case, I have our option closing in an LLC at an 80% LTV cash out investment. 10.125 lowest cost option, and we can buy that down all the way to 8.75%. So great options, 80% LTV for our investors as well as primaries on 1099. So make sure you reach out to all your realtors and all your other borrowers with 1099 and tell them we can use 90% of the gross amount on the 1099. The only thing you're going to be asked on these usually will be to provide a wage transcript, which is going to be W-2 and 1099 only transcript, which would just be to verify the gross amount on the 1099 being provided.
All right. I don't see any questions. Great option there. So we'll go ahead and wrap it up then. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.